Okay, welcome everybody to this evening's ACY Securities webinar, Forex Trading Live Market Analysis. If you're on our YouTube live stream, I can't see the chat, but you're more than welcome to join us by following the link that I've given you. Other than that, you're more than welcome to watch, but I can't answer your questions. I can't see the chat. Everybody else, let's just go through a bit of housekeeping. If you can read through the risk disclaimer, that would be great. Any questions to the chat box, the question and answer box? I've got both open. All right, I'll just let you finish reading through that. All right, let's move along. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Training Mentor here at ACY Securities. And I'm a full-time trader. I've been trading the Forex market now for 15 years, more than 15 years, mentoring clients for more than 10. If you want to contact me about the webinars, just shoot me an email to duncan.cooper@acy.com. And through the week, you can connect with me on our website, acy.com Market News tab, our YouTube channel, ACY Securities Australia, and you can connect with me on Twitter and LinkedIn as well personally if you want to. Those are my handles. As well, through the week in our Telegram channel, I'm providing analysis based around our webinar education. So if you'd like to get access to that through the week, just contact Nathan Bray at acy.com. I'll put his details in the chat in a moment. And as well, if you want to get access to my chart layouts, indicators and setups, then just request, he will organize that for you as well. So I'll just put Nathan's details in the chat. All right, he's just come back from leave, so you should get a pretty quick response. All right, let's get to the charts. What we will do, we'll just have a quick look at the news coming out over the next 2 days or so. So let me just refresh this. All right, so tonight we have 11:15, one of the members of the FOMC is talking. But at midnight, we've got the US job openings. And tomorrow morning for New Zealand, we've got the official cash rate, RBN rate statement with ADP non-farm employment change tomorrow evening and ISM services PMI. Today, we've had the cash rate in Australia. Was expecting a 50 base point rise, but we only got 25 base points. So obviously the RBA is either thinking that our economy is chugging along okay and our inflation is maybe going to be getting under control with 25 base point rates, or maybe they're concerned that keep giving us 50 base point rates will just make the housing market collapse and people won't be able to pay the mortgages. So that might be more the concern, but we'll wait and see what transpires over the coming weeks. In any event, it has sent the Aussie dollar positive today. So let's have a look at the charts now. There's a bit of a two-horse race at the moment. We've been seeing, before we get into the charts in detail, this is the pound dollar. This has been moving up nice and strongly. I'll just move to the day chart. And the euro dollar has been moving up nice and strongly. Both of those two pairs are coming up to some resistance areas where normally would expect maybe them to top out, but it's just a question of the strong corrective moves that they've been having. Is that going to continue? As well, the other side of the coin would be as well, which it's hard to translate slightly at the moment, is the likes of maybe the Aussie dollar here and the New Zealand dollar. They are having some form of correctiveness, but it's nowhere near as large. But they've been positive today on the interest rate decision from the Aussie. And the question in my mind is, are these going to catch up? And if they're going to, if these pairs are going to continue up like the Aussie dollar and the New Zealand dollar, is that going to further mean that the euro dollar and the pound dollar is going to move up even further? Or is it a question of that the pound dollar and the euro dollar is going to top out? And all we're seeing really on the Aussie dollar and the New Zealand dollar is that they're having a very small corrective move before the next decline. So that's what's happening in mind. So first of all, we'll have a look at the dollar index. And what we're seeing on the dollar index, it's not really that noticeable on the monthly, is we're negative for this month, but it's early days in the month, and we're still very much in an uptrend on the monthly. All right, we've moved above, we squashed this in, the last level of resistance at 111.31. All-time, well, it's not the all-time high, but the considerable high that we've moved down from over the last 20 years, 121.02. Are we heading up towards there? So at the moment on the monthly, as we start the new month, we're having a bit of a negative time. On the weekly, we're having negative week last week, moving into a negative week this week. It's just pulling back to that monthly level of broken resistance. Is that going to act as support? On the daily, we could just be having this fib pullback. We're at the 62. We're at that monthly level of broken resistance becoming support potentially. Is this just correction finishing for another 2 or 3 weeks up? All right, so we will wait and see how, just monitor the position of the dollar index. It's coming back to a level of support, fib support. Pound dollar, for example, and euro dollar, for example, have moved up to resistance. Are they going to turn around, do the opposite move of this moving up from support? What we're seeing on the S&P 500 is Monday into Tuesday, we're obviously reversing down here at monthly supports. All right, there's the monthly support level here. Was quite an aggressive move yesterday. Is this a major bottom coming in, or are we just in a short-term corrective week? So the weekly look here, we have put in a low for the week. If we continue up today, we're going to have an outside up week. So that being said, having an outside reversal week, a monthly support, could mean that we're going to have a much more considerable move up. We've also got the job figures as well coming out on Friday. So just a little bit of uncertainty as to what the overall direction is going to be. We're obviously just at the start of the month, but it'd be nice to have a clear game plan at the start of the month to go by for the rest of the month. So it'd be nice to know that either we're going to get a large correction, or is it a small correction before we can start to move forward. So in my mind, I'm not entirely sure what's going on in terms of a short-term correction or a large-term correction. So we'll just have to monitor the position of the S&P 500. Is this a short-term correction? Notably, if it's short-term, this is a weekly area of broken support just here on the S&P 500, 37.17 to the nearest point. So it holding there, held there last week. It holding there and failing to move back below monthly support would be more in line with maybe what we're going to see on the dollar index, which is positivity. So let's have a look at the pairs now. We might start with the pound dollar. Now, it has hit, it's on the 15-minute chart here, it has hit monthly resistance at 114.09. All right, I did a video today on this pair looking at that area to be resistance. So if I go to the higher time frames, the monthly chart here, this is this low here. So we've actually traded down last week to the all-time low, and then this low at 114.09 got broken last month. We traded back up to it, been about 20 pips above today's session. And we're having a bit of a correction on the weekly. Week up, we have a lower top here, which is last month's high here. And what we're really doing is trading within the range of last month. I had the webinar. If you've been to the webinar on monthly candles, that's the candle of last month. We've been up to the 79% level of the candle range. Is this at the start of the month putting in the top for another month down? Okay, so I'm monitoring 140.30. Really the area that we're in at the moment. We've got daily resistance at 113.50, monthly resistance at 114.09, and the 79% fib at 114.30. We traded up today to 114.29.5. So half a pip away from the 79% level. And 4-hour structure is still up. As you get into the 15-minute chart, whilst I've been talking, it's just it's tried to have another retest up there of the 114.09 level, and it's put in an outside candle. Now, it may get support at 113.50. It may still have another go up there. So I'm just monitoring to see whether it can have another go up here. Can I see an opportunity trade up here? Now, might not give me that. I might have to structure something else. At the moment, it's moving down. So, depending on how aggressive you want to be, we've already had a trend line break. And it's already down 80 pips from pretty much where it's topped. So it's very volatile. So it might, over the next, if I move it back to the 4-hour chart, might go up for another retest of that level. Or what we might start to see is a breakdown. We might have to wait for a breakdown now with the 4-hour chart to maybe come to a lower point. Wanting to come up to put in a lower top. So it putting in a lower top might come up here to offer a retest of this area, like a 79% retracement for an opportunity to sell to trade down. All right. Looks today like, yes, the sellers were clearly watching the area. I don't know whether anybody traded in the area today, but it's definitely getting some selling pressure from the 1400 level to the 1409, and it was half a bit shy of the 79% level. So you can watch that area for further failure. And the euro dollar, a little bit similar. I've been waiting for it to come up to 99.04 to 99.52 weekly resistance, and I have a fib in the similar vein drawn across the monthly range. 62 levels at 99.44. Today we're about half a pip away from hitting the 99 level. So is that where we're topping out? Moving into this area of resistance here. Structure on the 4-hour is still up, so it could be both on the pound and the euro. The structure is still up, so we might be just seeing some sell orders before maybe getting up to the higher levels of resistance. I'd much prefer to see this come up to 99.52 to 99.44. See this lovely area consolidation before we broke down. So that would be, for me, the most desirable area to trade from. However, price doesn't always come to the level that I'm watching. So just monitoring that pair. We're getting into a zone where we could put in the top for the month. We had a month down. This is the range for the whole month. So the whole candle for the month. And as I've discussed before, the 62 level or the 79 level of the candle is often where the high of the next monthly candle will come in. So watch. I mean, we could be failing here at daily resistance, 98.64, but I'm watching a little bit higher up at 99.52. Weekly resistance, 62% retracement at 99.44. So you can monitor to see whether the price gets into that area or not. At the moment, it's looking a bit negative. It is giving you some form of trend line break in this area at the moment. So maybe it's just failing at 99 and the 98.64 day resistance. You'll just have to monitor and make a decision about when you might want to engage or not engage. All right. So both of those pairs have given you some selling pressure in the area. Just seeing what the pound dollar is doing. Might be getting some buy orders here at 113.50 to be supports, but we just had a nice outside reversal candle. So clearly sellers are congregating just around the 114 level there at the moment. Or I'm just going to go left now and just go through the other pairs. All right, now to the day chart. First of all, I'm looking at this as a long-term range. And we'll pull back to the 79% level. So we could be moving back up here. Kind of put a bit of a higher bottom in here to maybe come up to retest these higher levels of resistance. However, I've got a couple of things that contradict. That could be how the structure is. However, when we just look at what happened last month, then last month we put in this very negative monthly candle. Are we going to continue with another monthly negative candle this month? So sometimes when you're doing your analysis, you can look at structurally, we got a higher bottom to a further higher top, but we've moved into a whole area of monthly resistance up here. The more recent top at 96.87 and this top here at 97.28. Are we topping out up here? Very negative last month. Are we simply just having some time up inside last month's range before moving further down? So weekly structure is up. You can see the MACD divergence though, so that you can see why, you know, to a higher top on the weekly, but the MACD is not giving you it. So are we seeing a change? Day trend, you know, I'm using my significant tops and bottoms. I am still in a downtrend, even though there's a minor higher bottom here. So today's candle, this level of broken day support, 94.759, maybe that's calling the top for the week. Been fraction short. Like these still down. So the 4-hour structure here is still up, but if we change structure, maybe we have failed here. This is the high of the week. We're actually having a week up this week, but it could be that we've failed at the top. We're just having a week up to a level of resistance before we're going to continue down. So I have a little bit of conflict in my mind. I can see we've moved up to a higher top here, but I can see that we failed at major resistance. So when I've got conflict, you know, I just have to wait until I don't have conflict in my mind. So I'm a little bit conflicted about the overall direction there. I think if the 4-hour trend turns down over the next couple of days, maybe we're putting in the high of the week here. So I'm just on my hands. I actually was in a long position, but I've just gotten taken out break even with this rejection. So I don't know if we're turning back down the other way. Anybody got an opinion? We didn't have the 50 base point rise that we wanted or were maybe expecting. So even though we have seen some positivity today, we could see a sell-off because the interest rate differential definitely on the Aussie versus the US dollar favors the US side. With the Aussie to the yen, it does favor the Aussie on this pair. So to the Aussie dollar, and let's go back to the Aussie yen. If we, as well from an intraday perspective, today we've tried to move above 94, but clearly we've had a quick sell-off below 94. If today we clearly close below 94, tomorrow I'd be looking at 94 to be resistance for a further move down. So just watching where price closes tomorrow or today into tomorrow's trading. You know, if we close nicely above 94, well, 94 could be support to move up tomorrow. But if we close nicely below 94, look for 94 to be resistance. So at the moment, we are below 94. Aussie dollar. So let's just have a look at the monthly. Last month was very negative. All right, we've come down to form a daily level of support. It's actually at a low of a month here as well, but weekly, we're just having a week up. Only just. Maybe we're failing at the high of the week. All right, had 3 very negative weeks, just managing to eat 1 week up. Daily, it's putting this minor little higher bottom here, but looking at the larger swing points, this is still lower top to lower bottom. So just want to find that's the high of last month. Now, if we can see some movement up the chart, longer term trends are down, so we might have some short term movement as we get into the start of the month, but we've got monthly resistance, broken support, in resistance now at 66.71, weekly resistance at 66.81. So if we can continue the upward move from yesterday into today, into the rest of the week, certainly I'm just trying to get myself set for the month. Can I get myself in a position to trade with the trend for the month? This would be a great area up here, 66.71, 66.81, if price can get there. But if the euro dollar and the pound dollar is failing and they start to sell off, I don't think we can get up there. So at the moment, 6,500, very much like the Aussie yen. We moved above it yesterday. So on Friday, we had a heavy sell-off. We didn't want to be above 65. Yesterday, we came back above it. We've been above it today, but we can't hold above it. So if we close below 65, look to 65 to be resistance. All right, if you've got my other charts on the Aussie, last week's high is at 65.37. So we've kind of false broken last week's high. So we might see a retest of last week's high, 65.37. But I think if we close below 65 today, the best we might get on a upward move again would be a retest and failure at 65. So just keep watching. If you're bullish, Aussie, at the moment, we've had this move up from this low from the interest rate decision. We're pulling back to the 62 of that upward move. And we may come and just dip down to center pivot. If this area forms some form of support and you've got a bullish frame of mind, we could well put in another leg up. All right. I don't like the way, though, it's not holding at 65. For me, if this upward move here was now the bull's getting in control to move it higher, maybe up to 66, 67, they should be holding it above 65. So be interesting to see whether this pair closes come the end of the day. Are we above or below 65? All right, Euro Yen. Now this is a little bit different on the monthly chart. Last month, we had a positive month. We didn't put in a negative month like on the Aussie yen. So it's a little bit differently structured because it's been positive because of the rally that we ended up finishing on the euro dollar, whereas we didn't have that on the Aussie dollar. So we're coming up to some major resistance levels. Watch 144.24 monthly resistance. Watch 145.68 that we not quite sure if we tested that. 145.63. We didn't quite get there. 5 pips short. All right, so we might not even get above the significant top here that we formed. But structurally, this is still in an uptrend. But if all the other yen crosses are looking weak, then we may well come up to retest that level, but it may not have the strength to maintain a move above. So I would be watching that level quite closely, 144.24. Weekly, it is up. All right, higher top. From that bottom to a higher top, this is maybe putting in a higher bottom here. So it looks a little bit different to the Aussie yen of sorts. It's not showing you divergence on the MACD. So this may well come up to test these high levels of resistance. But through the course of the month, you know, these levels, see how we failed here? Structurally, in terms of the major tops and bottoms, this is still in a downtrend, even though we had an outside candle here, which kind of put this much more into an uptrend in the short term. There's a lower top there to a lower bottom. Is this coming in to put in another lower top, or is it going to move up? So if you wanted to be in this pair to the long side, just putting that fib in, I'll be on 79% of that range at the moment. But if you wanted to be long this pair, early last week was the better time to get long when we were getting support down at support here. Because now you're trading into, you know, we're trying to break above resistance here at the moment. And we've got more, we've got major resistance at 144.24. So you've got 140 pips to go. So what, of course we can blow through those levels, but if you want to trade to the long side, for our structures up, we really need to hold above 142.31, which was daily resistance, now to become day support. All right, this top over here, 142.31. So any pullback now, there's that level. You see intraday today, we were getting support. So pull back to that level, maybe tomorrow, could offer support for a continued move up. All right. But if we break below that level, watch that level to be resistance for a move back down. All right. So the euro yen is definitely getting into some area of resistance. There's always the question if the Aussie yen has rejected last month and it's going to have a month down this month, the euro yen could follow suit. So this movement up across this whole range, there's a bigger 79% level there at 143.85, just short of the 144.24 resistance here. So, you know, seeing a failure in that area could be a good area to look for a short, as we're just waiting to see what the new month brings. In the short term, if you want to be to the buy side, 142.31. It is on the 15-minute chart, needs to hold as support. If we clearly move back below that level, then you're looking at 142.31 to be resistance for a move down. All right, euro dollar, we've covered that one. It's still holding below or at day resistance there. Has it failed? Pound yen, I mean, look at I can't even think about trading this pair at the moment. It's that volatile, but look at the movement we've had down and all the way back up. Now, if you look at the monthly, at the moment, you know, it's rejected a couple of levels of monthly support here. It's like, which way is it going? It's very difficult to determine. It's clearly trading in a large range, but as it comes up to the upper reaches of the range, is it simply going to fail? All right. Is this putting in, this is my weekly chart, is this coming up to put it in the lower top here? Is it going to come up to this top, which is 166.33, and create a head and shoulder pattern? All right, structurally down the weekly, it is still negative. All right. So on the daily, you know, we could be looking at, what you could be looking at, if we are putting in a top up here, to put in a lower top on the weekly chart, then, you know, you've got a reference point here, the 79% fib, 163.29. Do we start to want to move below that level? And this level of resistance at 162.73 that we've moved above yesterday, do we start to move back below? So do we start to see this sort of structure forming, moving below, retest, moving back down from 162.73. So do you kind of see that structure on the 4-hour chart? So on the 4-hour chart at the moment, I'm pretty sure the trend is up, but do we start to see a movement back below 162.73? Ideally, can we move to a lower bottom? Can we come up for a lower top? to move down. All right, you can see the negativity on the current candle. Pretty sure that pound dollar is moving down. Let's just go and have a look at it. Yep, it's moving below both those resistance levels at the moment. So quite clearly, if you had nerves of steel and you were prepared to trade at 114.09, I took you through the 100 pip trade entry last week. If you had the nerve to trade there today, you could have sold it at 114.09, stop at 115.09. So, you know, it's not down 100 pips yet, but it's getting towards it almost being down 100 pips. All right, you could, if you were, you know, if you're taking the trade, you could have your risk out by now if you're concerned that price might come back up and take you out. You could be at break even with nothing to be concerned about, waiting to see, is this now just going to continue down the chart or come back up for a retest? All right, New Zealand yen. Now, like the Aussie yen, significantly monthly rejection candle there, okay? Excuse me. And we've been putting in a lot of weekly tops here, all these lines across the weekly tops. And there is a significant, I didn't put it in on the Aussie yen, but there's a significant 79% retracement level here. So is that where we're turning? So on the weekly, we've got all these tops up here that we failed at. We put in that monthly rejection. We've got divergence on the weekly MACD there. We're just having a week up. We're just coming up above, trying to come back above this area here. Is this area now resistance? Are we just having 1 week up? Are we rejecting resistance to move down? All right, so structurally at the moment, the 4-hour chart's up, but if we see structure change, so if we break below that low, do we see a rally back up? To put in a lower top on the 4-hour chart to move down. All right, we've got the interest rate decision for the New Zealand crosses tomorrow, so I wouldn't be doing anything on these pairs till then, but you know, we may come back up and have another test of 82.96 tomorrow, so pretty much the 83 level. But if we start to fail after the interest rate decision at 83, we could well be failing there to move down. All right, New Zealand dollar. Again, interest rate decision tomorrow. Hasn't had much of a rally. Last month's candle. Just trying to find the top of last month. All right, that was the high last month. So if we could get a nice healthy rally, 59.21 is broken weekly support from back in time, lines up the 62 level. So through the course of the month, as playing out what could happen for the month, 59.21 to 59.33 would be a good level of resistance, and a higher up level at 60.47 with a 79% fib there at I think it's 33, 60.33. Doesn't mean to say we can get up to those levels. We'll just have to monitor and see what's going on. As I say, if the pound dollar and the euro dollar is topped out, this may not have the ability to go up there because the US dollar will get sold off once more. So those will be good levels to watch for the month, but can we get there? At the moment, all we could be doing, if I move to my other charts, is that we could just be failing today. Same thing on the Aussie dollar, same thing on the Aussie yen and New Zealand yen, is we could just be failing at last week's high from move down. All right, Olive May got a question saying, retest of a broken major horizontal support resistance level 2. What extent is price likely to move after the break before retesting it? Which line are you looking at? Like once a level is broken, price can move as far through. Let's say we're talking about support. It's the same as resistance, but once price breaks a level of support, it can move through as far as it wants before it comes back. It doesn't have to come back, for example. So as I'm discussing here in the New Zealand dollar, we've broken this level. Price does not have to get back to that level before it drops another 300 pips, especially if we're dealing with a very volatile market. In a normal market, price will break support and then come back up for it to be resistance. All right. However, it doesn't have to get back up there. So I'm always looking to trade these areas. Now I could be looking all months to trade these areas and price doesn't want to get back up. So there's not a set price point of how many pips it's going to move below before it comes back. It can break below 400 pips, for example, then only rally 200 and not get back to that level and then continue down. All right. On the other side of the coin, what we've seen on the pound dollar, this dropped over 1,000 pips from day support before rallying back up to the area. All right. But there was no guarantee in this environment that price was going to get back to that level before putting in a lower top that never met resistance. So it does depend on the market volatility, yes. Often though, price will come back to, you can see here, even though we dropped 1,000 pips, price has come back, but it doesn't have to come back. So there's not 100% guarantee that it will. The market can decide that it's weak, it doesn't want to move back up to that level, and it wants to keep selling off. All right. So it doesn't have to. There's an area up here, for example, on the pound dollar. See this level of support that got broken? It was about the 130 level. Well, we've never been back. All right. Now we might go back to that level in 2, 3, 4 years. But when we're talking about from month to month, price doesn't have to come back to the level. Often it will in a normal market ebb and flow and how it creates its structure. Usually it's broken support becomes resistance, but price doesn't have to get back to the level. All right. So we might not see that in the New Zealand dollar. We may or we may not. I just feel like if the pound dollar starts to move down and the euro dollar starts to move down from its levels of resistance, Aussie dollar and New Zealand dollar haven't got anywhere near their levels. And if we see continued strength on the US dollar, I don't think we'll get back. We'll just have to wait and see what happens through the month. All right. But at the start of the month, it's good to get the levels clearly on your charts where price might get to. We've got the job figures on Friday from the US. So we could definitely get up to here this week. But if we get up to there this week, probably the pound dollar and the euro dollar will have to move higher up. Time will tell. All right. So, but as I was saying, what we might be seeing on the Aussie dollar and the New Zealand dollar, Aussie yen, New Zealand yen, is all they're doing at the moment is just managing to break the high of last week. And we might see retests of the high of last week for failure to then move down. All right. So at the moment, we're definitely getting capped on Aussie yen, Aussie dollar, New Zealand yen, New Zealand dollar at the false break of last week's high. So if it's a false break of last week's high, we could well now just be trading straight back down to test last week's low. So any further failure at the last week's high of those pairs, look to trade down. So at the moment, in terms of a figure level for the New Zealand dollar, we are holding above 57. You can see today we've been getting support at 57. So if we do close up today, you could be looking tomorrow. We don't know what the interest rate decision will do and what price does, but tomorrow after the interest rate decision, 57 could be support. If we're below 57 come the close today, and we're below 57 when the interest rate decision comes out tomorrow, then any movement up could well get capped at 57. All right. Or, we could well get capped once more at last week's high. If you don't have my charts, last week's high is at 57.54. All right. At the moment, if you're bullish, you can be drawing a fib across the current upward move that we've been having. There's a 62% retracement here. If it pulls back up to the figure, you got the 79% level at 56.96. These levels could offer support intraday today for a further move higher. All right. They might not move higher though if the pound dollar and euro dollar can't move higher. So keep as well. You know, if we go to the dollar index right now, to the 15-minute chart, there's last week's low on the dollar index. You know, if we start to move back above last week's low, that could well be the deciding factor that the dollar index wants to start to move back up. All right. So watch the structure and the levels on the dollar index as well. Now the dollar yen, it doesn't seem to want to do anything at the moment, does it? This is the daily look. This 144.99 level. I have seen a few very aggressive dips over the last couple of days on the dollar yen. I don't know if that's just keeps having some intervention from the BOJ, Bank of Japan. But if you move it just down to the 15-minute chart, you can see we had an aggressive spike down here yesterday through Asia. Then another aggressive move down here yesterday. So I don't know if there's some intervention coming in this pair, but it's definitely getting capped at 145. Now, whilst it's getting capped at 145, your monthly structure is clearly up. Your weekly structure is still clearly up. All right. And we're just in a phase of consolidation here on the daily, going across here. Now on the 4-hour chart, you could draw in that area of consolidation. I suppose the lowest, use that level there because that was this was a false break of that level. So 140.058. Clearly, so it looks very much like we're capped at 144 up to 145. Longer term structure wise, we're in an uptrend. I know there's the Bank of Japan that may be coming in to intervene, but clearly the interest rate differential is on the US side, not on the Japanese yen side. So traders will be buying it for the interest rate differential. So whilst it's in this range here, you can move to 1-hour chart to see it a little bit clearer maybe. You know, looking at 144 to be support, to move back up to 145 would be the ploy. Although you could go, well, you're more concerned about the Bank of Japan coming in to intervene, so you could be looking at trading 145 down to 144. But in any event, however you feel is the more appropriate direction to trade, it's basically trading between 144 and 145. So whichever side of the market you're more comfortable with, the trend is from 144 up to 145. Obviously, the concern of the Bank of Japan, if that's what you're concerned about, would be to trade down from 145 down to 144. Or obviously do nothing. Look at a pair that's maybe moving better, because at the moment it's just stuck in a 100 pip range. So, you know, work out for yourself. Do you want to trade that maybe consistent range at the moment? Things to watch out for in the month. Back to the daily. You know, that candle down was the intervention. And we're holding the 79% area up here of the corrective rally back up. So I could see why maybe you want to sell it. This could be left shoulder, head, right shoulder, forming at the 79% level to move down. However, I just don't see this moving down significantly unless the Bank of Japan is going to come in and intervene for a large period because of the interest rate on the US side. All right. Now, of course, what we've had with the Bank of England is they're raising interest rates, but because the currency got very, very discounted, then whilst we've still got interest rates high, then the Bank of England came in and started to buy the gilts or the bonds in the UK market. So whilst they're raising interest rates, they're kind of doing quantitative easing all at the same time. And the government said they're going to have lower taxes across the board for various different things, but they came out on the weekend and said, okay, for high income tax earners, they're still going to keep the high threshold. So that obviously helped. On Monday, the pound dollar moved back up. So there's lots of changing decisions from central banks at the moment. So all we need from the US is maybe them to say something slightly different. We start to get a weakening of data and a slightly dovish tone from the next FOMC meeting. Yes, maybe this could put a top in here to move down for a while. But for me, I think I'd be looking at something else. But you need to make your own decision. Do you think it's topping at 145 for a move down? All right, you can make your decision. Then the last pair to look at is dollar Canadian. I just want to see what the pound's doing once more. All right, because I'm interested in this area up here. All right, so monthly chart on the dollar Canadian. I put it out there last week. Are we putting in a head and shoulder pattern? Now, of course, this is why some of these pairs are counter to some other pairs, and their direction is for this to move and create this pattern and trade down. That's going to need US dollar weakness or Canadian strength coming in any event. All right. If in general terms for that pattern to form needs US dollar weakness, then we're going to see that weakness in the other pairs to the US dollar. So they would be moving up. So I'm not quite sure, if we do see the pairs to the US dollar move down, I don't think this pattern can come to fruition because it will be going counter to the general market. However, you can just keep watching to see whether it is going to perform. So at the moment, it's holding at monthly resistance. If you were game enough on Monday, you could have sold it up here at resistance because that monthly resistance is at 137.92. We pretty much topped out Monday up there. We're a fraction above. It's very difficult when Friday screams straight up because then you're thinking we're going to go another 100 pips above this level, but then the next day we drop straight back down. But ultimately, you need to think about your trading a resistance level, and your resistance level is 137.92. So pretty much the 138.00 level. It did hold there yesterday. It's moved down to a lower bottom. So we might come back up for a retest to put in a lower top. That's definitely something to monitor over the next few days. All right, so structure in the 4-hour chart were down. We actually got divergence on the indicator because that was a fractionally higher top just here. So you could monitor now a corrective rally. Be great if it came back up to the 79% level, 137.78, up to retest 137.92. Now, but if you traded the 100 pip entry, sold it at 137.92, then 137.92, we've actually moved down 200 pips. Okay, so if you're prepared to trade, I've showed you two trades today, one on the pound, this one on the dollar Canadian. If you're prepared to trade at major resistance with a 100 pip stop, you wouldn't have had a losing trade on the pound or the dollar Canadian because both have moved down from their levels. Dollar Canadian, you could have made a 1 to 2 trade there and be out already, waiting for this to come up for a retest, and then you could look for another entry. All right, you have to be prepared to go, okay, I like that technique, and you can't look at your trades being profitable every time. You have to look at your trades being profitable over a group of trades. So if you decide you want to trade that kind of approach, you can't expect your first trades to work because you don't know which trade is going to win, lose, or break even when you're setting them up. I'm just showing you two here that I know for sure. I know for sure this is a win of 1 to 2. The one on the pound dollar, I don't know yet. You could have gotten your risk out now if you're concerned. It may well come up for a retest today, and you could take that 100 pip trade again at 114.09 if it retests. Okay, you just need to make a decision. Do you want to take that trade? All right, so back to the dollar Canadian. Is this going to come up for a retest? Is this, is the US dollar strength just too strong? And we're going to end up above that level by the end of the week. From a news event perspective, just to concern yourself with for the dollar Canadian, on Friday, we have unemployment rates for Canada and US. So you're going to want to be sitting in a trade that's not showing any profit by that time. And there's the Bank of Governor talking 1:35 a.m. early Friday morning. All right, so just be aware of where the danger is. There's definitely danger on Friday. So whatever you're doing on the dollar Canadian, just be aware of what's going on there. All right. So interesting though, what I did notice is this is the weekly chart. We weren't able to break the low of last week. So whilst we've had a nice sell-off, we haven't broken the low last week. We could have found support down there to trade all the way back up and move above the tops. All right. So it is a little bit sideways there as well. Maybe this is just consolidating, getting ready to move higher. You never know. You have to take an approach to the market and decide what you want to do. All right. Already with the 100 pip entry, you could have made a risk reward of 1 to 2. It might come up and offer you a 79% retracement. Is that going to work? We won't know until it hits. All right. The other side of the coin is that the US dollar is just going to be strong, strong, strong. And really what we're seeing here is some form of consolidation before we consider we move higher. If that's the case, this is the bottom of the range to be a buyer, to trade up to test resistance for a move higher. All right, there's both sides of the coin there. So you just have to work out yourself what side of the coin are you on. All right, Slav, you're talking to me. So you're saying the way the pound was going up against the US dollar, it seems there is still some puff left in it to go even higher. Maybe until the next of the week, until markets start to tire of watching the Bank of England antics. Well, could be, although could be just simply, if you look at the pound dollar, what is true to form on the pound dollar at the moment is whilst we're trading below the major low, support held to trade back up to resistance. Is resistance going to hold now to trade back down to support? All right. Maybe the market is just clearly respecting support and resistance. All right. Now, of course, see, when this moved down so aggressively, you probably were fearful to be buying this all the way back up. Now that it's aggressively moved up, you're fearful to be a seller to trade it back down. All right. So what you have to do is decide what your strategy is going to be to confirm that, okay, I think a top's come in before you trade. All right. It is volatile, but it has today quite clearly respected this area of resistance today. All right, let's have a look at gold to finish off. I did a video on this earlier in the day. We've been 2 weeks below 1676 major monthly supports. And now we're back above. I always get concerned that this is going to happen, what's happening right now. Because when it's major supports, price gets put below here. There are sell stops below here going off for traders that are long, retail traders. And underneath here, institutional trader buying, they're taking the other side of those sells. And even though we were below there for 2 weeks, ultimately we couldn't hold below there. Now we could be moving all the way back up now to weekly resistance here. We could be moving all the way back up to the all-time highs here. All right. Now, the daily, you can see it almost put in the weekly range yesterday. Pretty much, if you look at the weekly chart here, we've done the range of last week already in 1.5 days. All right, so clearly people are coming in and buying gold. They've decided this is a reversal. Now, there's actually this structure of the weekly trend is down. I'm thinking it's going to come back up and retest resistance, but it could just come up to the 62 or the 79 level. Or yes, it could come up to resistance. At the moment, it's moved into a daily uptrend. We've moved above the top. My analysis today was to say, well, whether it's on the day chart look or the 4-hour look, can we now pull back to support, to be support, to move higher? All right, price might come to support, give you that opportunity to be a buyer at support, or it simply won't give it to you. So on the 4-hour at the moment, fib structure, 62 is now just fractionally above support at 1679. Most definitely I would look for now, looking for a continuation pattern on the 4-hour chart. All right. If it will give you a pullback, because at the moment, it is just moving up. All right. That's always a problem when the market, see over here where it was all this resistance, or whoever's selling here, right, to trade down, not just whoever, but all the people, all the traders here that were selling to move down are having to cover their positions now. All right. They sold, they're having to buy to cover. This is why this is going up so strongly. So this might not come back. All right. So you can monitor that to see whether it does pull back to 1676, but maybe it's not going to give you the opportunity. All right. So it becomes difficult to get in. So just monitor it for a 4-hour pullback with the fib. Does it give you that to get long? This now looks like a complete false break of the 1676 level. All right. This day, well, yesterday when it started to move through here was probably the time to get long if you were game enough to trade the break. All right, any more questions? Of course, tonight's presentation is much more just having a look at, all right, we're starting a new month. So let's have a look at the structure. Where could price be pulling back to as we head into the first week of the month? Can we get ourselves set maybe for a long-term trade for the rest of the month? All right. Coming up tomorrow, I'm going to be doing a bit of a review of last month, looking at the structure, looking at patterns that may have formed. Not sure whether there were too many patterns that formed last month. It was all about structure, trend and structure, just trading the trend and having the confidence that the structure is working. Because if you just employed that last month, you would have gone okay. You should have been able to trade the pound dollar into some profit on that move down, because we definitely had broken support structure becoming resistance. So I'll go through a number of pairs tomorrow in terms of what happened last month, how you should have been looking at the structure, how you should have been looking at trading around that structure, so that you can look at the hindsight view and hopefully you can then put it into practice as foresight as you move forward. All right. Because right now, I don't know, we talk about the pound. I'll cover this tomorrow, but the 113.50 level became broken, support became resistance last month, just here, to move 1,000 pips down. Now, of course, none of us knew that it was going to move down 1,000 pips, but if you're just trading along with the trend, broken support structure becomes resistance. There was 1,000 pips there. All right. Now we're at the same kind of area now where resistance could hold as resistance for maybe another 1,000 pips move down. All right. I know this is volatile at the moment, the pound dollar, and you might have to lessen the amount the size that you trade. You might have to have a wider stop to what you normally use, but you would have never have thought when it was at 113.50 that it would move down to there. And you probably didn't think that it was moving back to here when it was down there. So at the moment, you're probably thinking it's not moving back down to here when it's up at 113.50 again. But if something sets up here structurally that you would normally trade and you don't trade it, and then it moves down 1,000 pips, you'll just kick yourself, won't you? So you have to have a plan of attack that you're going to trade. And as a trade's set up, you trade that plan, because nobody knows. You can see the best setup in the world, but you don't know if it's going to work or not. You just have to look at your trade setup that you want to trade and take it time and time again. And you look at your profitability over sets of trades, 20 trades as a minimum, to see whether you're profitable trading at a particular setup. All right. So Cameron, you asked me, would I generally go to the 50-minute on these pairs to see fail in the trend? This is this here at the moment. It's failed on the 15, but maybe the 15 is now moving back up again. A safer ploy, if you don't want to trade at the level, say with a 100 pip stop to get the best price, the safer ploy would be to wait for the 4-hour structure, wait for some 4-hour structure here to say it's holding. So maybe, I don't know what price will do over the next week. We could just consolidate here for the next week. All right, I know it's been going up, but we could start to consolidate. Then if you see consolidation form, you could be looking to trade to short the tops here. All right. Or what might happen from where we're at right now is that, you know, we see a change in structure, we move to a lower point, then we come up to put in a lower top, and we might see a 79% fib form. So I'd be more inclined to maybe look for 4-hour structure to form. The downside to that is, if this is going to move down, if this, let's say this comes up for a retest and then moves down, if you want to get in on the retest with a 100 pip stop, because that guarantees you getting in. But of course, you could be wrong. If you want to take a safer ploy, you wait for the structure to form. But whatever technique you use, a technique doesn't necessarily work. All right. Every technique that you can employ is going to have its losses. All right. So whether you go, I want to trade the 15-minute entry, that will have its losses from time to time. If you want to trade the 100 pip stop entry, that's going to have its losses from time to time. If you wait for structure to form, so you could wait for a lower bottom to form on the 4-hour, we move down, you look to sell the rally as it comes back up at the 79, but then that could just go straight through the top. All right, there's no guarantee that the structure will work. So there is no guarantee that anything that you're going to use is going to work. That's why I'm saying to you, whatever way you're going to do it, you need to go, okay, this is how I'm going to do it moving forward. And I'm going to stick to it long term and review my profitability over 20 entries, 20 trades, 40 trades, 60 trades. All right. Now I do change the way I get in from time to time, depending on how I'm seeing a pair. But I'm actually looking at this pair at the moment. If this comes back up and retests 114.09, I'm just going to sell it with a 100 pip stop. It's failed there once already, so I'm just going to have a go. Now, it's either going to work or it's not. All right. I don't even know if this is even going to get up to retest 114.09, because at the moment it's moved down. It's put in a lower top here. It's moved down. This is maybe putting in another lower top to move down. So I'm going to have to look at another way of structuring things if it doesn't want to have a retest. All right. So I might have to wait for the 4-hour structure to turn down, and then does it give a rally? Okay. So at times, however I'm looking to get in, I can miss out. I'm the same as anybody else. Yes, at times I can be getting in at the most beautiful spot and it works out great. Other times I'm trying to get in at the most beautiful spot and then I don't. Sometimes I get in at the most beautiful spot and I'm wrong. So you just have to work out how you want to engage it. It's already giving you, a trend line break. It's already giving the 100 pip entry. It's giving you a trend line break entry. Will it give you another retest and failure kind of entry? You'll just have to monitor. All right. We've got the job figures coming out on Friday, so we might see a further, we could sell down 200 pips through the week. Come the end of the week when the job figures come in, we could end up moving back up to that level for another test and another opportunity to get in at that level. I can often be watching a pair thinking, I've missed the boat at that level now. And then a news event comes and it drives at 100 and 150 pips one way or the other to the area that I'm watching. And then suddenly you're presented with an opportunity to get in. All right. So most of all, it's just about patience, knowing how you want to get in, and then waiting for that approach to come on the chart and take it when it arrives. That's why when I'm going through my analysis today, I'm telling you all the great levels to watch for the current month. Whether or not price is going to get there this month, I don't know. But price will probably get to some of the levels. In my analysis today in Telegram, I've talked about the euro dollar levels, the pound dollar levels. They've all been touched today. So Slavia is saying either wait for a retest or a couple more lower highs and lows. Yep, you can look for a retest. You could wait for the 4-hour trend. And, let's say we do move down to retest where we came from down here at 104.63. We don't have to get in within the first 100 pips here. It's great if you can. But what if, it comes down, puts in a lower top, comes down. You could be selling the second lower top. All right. By the time we're putting in a second lower top, you'll be you're probably more confident that, okay, this thing's topped. All right. So we don't have to be getting in right at the top here. It's great if you can. But if this is going to move back down from where it came, there'll probably be more than a few opportunities to be able to get in and structure will form. Okay, so just be patient. At the moment, the question would be, do you want to be aggressive and trade at the level if it gives another retest? That would be the question at the moment. Or do you want to be more conservative and simply wait for a more conservative approach to get in? All right. There is the concern that the Bank of England is going to say something and this will go up another 200 pips. But, you could be short and the Bank of England says something and it goes down 200 pips. All right. So what I tend to find is with, releases of that information, it can work in your favor 50% of the time. It can work against you 50% of the time, and it kind of evens itself out. However, what normally happens is it normally goes with the trend. I would say more than 50% of the time, things go with the trend when there's a release of information. So the overall trend in the pound is down, even though we've had that corrective move back up. So, but, just be cautious. You don't have to trade the pound. It is volatile at the moment. You could look to a less volatile pair. All right. So coming up tomorrow, just to finish off, we do have, just to give you an update, the webinars for the week. Of course, the time has changed this week to 8 p.m. New South Wales time. Let's wait for this to load up. Whilst we're waiting for it to load up, tomorrow at 8 p.m, I'm going to be doing a review of the market structure that formed last month, and the patterns that may have formed. So you can learn from what did happen. That's tomorrow, 8 p.m. more live market analysis on Thursday. Next week, or in the current month, but next week, I'm going to start to go through market liquidity, introduction to smart money concepts. The week after, I'm going to go through, it's on here, order blocks, introduction to them. And then the week after that, I'm going to go through market imbalances. So I'm going to look at some other concepts, just introductory in the delivery. You could go, I'm not going to be taking it to a very advanced step, but I think if you have more knowledge about ways that other traders trade, then even if you're not using those concepts, if you've got at least a basic understanding of those concepts, then if you understand it and you see it on the chart, it's information that you can use. Certainly information that you can use to help you not lose money, because what you don't know can be risk and a loss to you in the market. So if you know other concepts that people are potentially trading and understanding, and you're not understanding it, what you don't understand in the market is obviously risk to you. So the more rounded knowledge you have of how other traders may be trading, then the better understanding of how the market moves for yourself. And that just helps you structure your trades better. Okay, so that's what's coming up in the month. And coming up tomorrow is a review of what happened last month. So we'll go through that. All right, so that's what's coming up. So if you've got the time, just come to the website, register your interest, and I look forward to seeing you then. All right, everybody. Thanks, everybody. Have a great evening.